Hi guys, this is Annie from Mommy Trades. Hope you guys are all doing fine and having a good and relaxed Sunday. I just wanted to give you an update that I'm almost done 50% with my trading setup guide that I've been working on. I'm just working on some additional video clips that I would like to make a part of that package as well. Of course, it just takes time with everything else I must focus on. So thanks for being patient. Now, once again, what you will be learning about in that guide includes how to interpret candlestick shapes and draw correct trend lines, then price action trading framework, which is at the heart of my trading. Also, how to time your trade entries. Also, sometimes I use Bollinger Bands and moving averages. I'm going to throw in some work around that area as well. It will also be including scanners and access to my chart list that I update periodically. Now, I've already provided a glimpse of what will be in the guide, but I thought of sharing one of my most favorite trading setups that I look for when I'm day trading. So it will also be explained in detail in the guide that I'm making. Uh, so I'm talking about trading pullbacks first of all. So if a stock is in a bull trend, everyone wants to catch the top and short it. But the problem is that no one knows where the top is. You try to figure it out by looking at a resistance, and sometimes it does work. But that is a classic case of predicting what the stock will do. Now, most of the traders, they make that mistake where they're trying to predict the next move. Now, in my personal experience and in my opinion, trading doesn't work like that. We should be reactive. We should not be predicting. We should only be reacting to the price. So what I mean is that you should plan and then execute when you see the setup appears. Now, best way to explain this is by looking at a chart and assuming a position of that counter trend trader who is looking to short or buy puts of a bullish trending chart. Now, they look at the RSI and other overbought indicators to make their case. However, what they ignore is the most important factor in analyzing charts is price itself. Now here we are looking at the Microsoft 10-minute chart from May 15, which was just this past week. Now you can see it started pretty strong and it was up $2 within an hour of the open. And then came the first pullback right there at point A. Traders get excited and they start shorting because they're happy that they have got the top of a price. So you can see it made a bearish candle, but there was no follow through to the downside. That was a warning to the sellers that there is no strength in the move down. When the next bullish bar appeared after that, we can put a buy stop order just a few ticks above it, and that would be quick scalping where you can get away with a good few points and get out of a trade with some quick profits. But you can see it immediately gave up its gains and it dropped back down with a big bearish bar. That is the point B on the chart. Now again, there is no follow through, and then you can see there is sideways movement. Point C and then point D, they're the same way. Bearish trend bars, no follow through to the downside. Now, moreover, you see there are no more than 3 consecutive bearish bars that you see on the chart. And even those bearish bars did not let the price break below the recent swing low, which was the recent low of the day. It was not able to break that price. So after a few hours of the sideways movement, we get a bullish bar that closed above the high of the day right at point E. And you also see at point E that the resistance got broken and the candlestick, it managed to close above this resistance line. So there were 2 points that were happening at point E. One, that the candle was able to close above the resistance line, and second, that it was able to beat the price of point B, which was the high of the day. So and this so that is a good point of getting into calls. I like this setup because it traps the short sellers and it gives us bulls some good nice immediate boost up. So the stock, it moved up 50 cents from that point. So of course it could have moved up further, but I like to capture quick profits. So if, for example, if you bought a call contract with a delta of let's say 50 cents, that half dollar move would have given you $25 on every contract. So with 5 contracts, you're looking to make about $125 before commissions in 20 minutes, which is not bad at all. So this is just one setup that I look for. Adding trend lines and support resistance levels, it that of course gives you more confidence. I'm going to be including all that in my guide as well. Now, a lot of folks draw trend lines incorrectly. Now, there are certain rules of how to draw trend lines, and also that you need to follow to be able to come up with an unbiased approach towards trading. So just do not create any bias when you're trading. Just trade unbiasedly and react to whatever is happening in that given price action. So all this is just a glimpse of what would be actually a part of my informational guide. Now this setup of price action and learning a little about candlesticks in detail is also available on my website. You can check it out, and hopefully my informational guide will be complete soon, and I will update you as soon as I get done with that. And hope to see you guys tomorrow with some more market action. And you guys have a great rest of the day. Enjoy with your families, and happy Sunday. Take care. Bye.